Welcome back, Capital Crew. Today, as usual, we're going to be diving into the dynamic world of finance and global insight. So hold on tight as we explore the recent market movements that have everyone talking. I'm your guide through this financial adventure, and I'm excited to unravel the details here for you. Let's start off with a bang. The S&P 500 and Nasdaq Composite are making headlines, clinching their longest winning streaks in nearly 2 years, building on November's rally. The S&P 500 edged up by 0.28%, closing at 4,378.38, while the Nasdaq soared 0.9%, reaching 13,639.86. The Dow Jones Industrial Average also joined the party, adding 56.74 points, settling at 34,152.60. This marks the S&P 500's 7 consecutive days of gains, a feat not seen since November of 2021. The Nasdaq, on the other hand, boasted 8 days of wins, breaking its previous 11-day streak from the same month. The Dow's rise for a 7th straight session is its longest since July. Now, what exactly is driving this market dance? Technology stocks took the lead as yields pulled back, with the 10-year Treasury notes yield trading about 9 basis points lower at 4.573%. Amazon and Salesforce led the charge with over 2 gains each. Tech giants like Apple, Microsoft, and Meta Platforms weren't far behind, securing about 1% gains. Semiconductor stocks, Advanced Micro Devices, Broadcom, and Intel rose in anticipation of funding of the CHIPS Act. Mona Mahajan, senior investment strategist at Edward Jones, noted the significance of lower yields in boosting the growth parts of the market. She also highlighted a potential cooling down in oil prices, contributing to positive sentiment around inflation and offering relief at the pump. Breaking into other news, Datadog surged 28.5% after surpassing quarterly expectations, and Uber rose 3.7% despite falling short of third-quarter earnings expectations. Wall Street is carefully weighing whether last week's rally can maintain momentum, especially after the 3 indices wrapped up their best week in 2023. So far, this month has seen gains across the board, with the Dow up 3.3%, the S&P up 4.4%, and the Nasdaq up a whopping 6.1%. As we look on ahead, the Wall Street eagerly anticipates more insights from central bank speakers, including Federal Reserve Chair Jerome Powell. Quarterly results from Disney, Wynn Resorts, and Occidental Petroleum are also on the horizon, promising more excitement in the days to come. Now let's talk about strategy. Wolf Research strategist Rob Ginsberg offers a cautionary note, suggesting that the current market rally might be fleeting. He points out a historical trend, mentioning that each rally before the July peak has stalled out before making a fresh 1-month high. However, he balances this with positive momentum indicators, signaling potential confirmation at the stock level. Taking a closer look at individual index performance, the Dow lagged behind in Tuesday's session, rising only 0.2%. Chevron weighed on the index with a nearly 2% loss, while Boeing, Caterpillar, and Dow Inc. also restricted gains with slides of over 1% each. However, Intel led the charge with a 2.3% gain, and Salesforce advanced by 2%. Shifting gears a bit, let's touch on some real estate insights. Meredith Whitney predicts that home values are due to drop in 2024, citing affordability issues as older populations downsize their homes. States with older demographics like Connecticut, New Jersey, New York, Pennsylvania, Ohio, and Illinois could face challenges unless they adjust home prices. As bid-ask spreads contract and home prices weaken, Whitney expects a pickup in home sales activity. Now, turning our attention to the energy sector, U.S. crude prices have fallen nearly 4% to their lowest level since July. Weak economic data overshadowed concerns about the Israel-Hamas conflict erupting into a broader regional conflict. West Texas Intermediate dropped to $77.73 a barrel, while Brent fell to $81.99 a barrel. Goldman Sachs' portfolio strategy research team adds an interesting perspective, noting that the 2024 U.S. presidential election, just 12 months away, could impact equity returns. Since 1984, the average S&P 500 return in election years has been 4% compared to 7% in non-election years. Defensive sectors tend to perform better in the run-up to presidential elections due to elevated uncertainty. Ending on a positive note, history suggests that the Nasdaq 100's current winning streak might continue. Bespoke Investment Group reveals that the tech-heavy index is on track for its 8th straight winning session, a feat it has achieved 20 times before. In 60% of these instances, the streak extended to 9 days with positive outcomes in 14 of the last 20 occurrences. And before we wrap up, let's take a look at some stocks hitting their 52-week highs and lows on Tuesday. Companies like J.M. Smucker, Chevron, Air Products and Chemicals, Dish Network, Marriott Vacations Worldwide, and Organon are trading at their lowest points in a while. Meanwhile, Walmart, CBOE Holdings, Ross Stores, Adobe, ServiceNow, Deckers Outdoor, and DraftKings are hitting record highs.